Good morning and welcome to the ADS Securities Markets Update. Beginning with the U.S. economic releases yesterday, most of the numbers came in with a disappointing reading. And first of all, the ADP non-farm employment change added 190,000 in new jobs, while estimates were to add more than 200,000 in new jobs. Moreover, the previous reading has been revised lower for the month of July back down toward 177,000 instead of 185,000. Moreover, the revision of both the non-farm productivity and the unit labor cost index was negative as well. The productivity has been revised higher to an increase of 3.3% in Q2 instead of the initial reading of 1.3%, while the unit labor cost index declined also by the most since Q2 of last year, declining by 1.4% instead of the initial reading of plus or an increase of 0.5%. Finally, and most importantly, the factory orders also increased way less than expected, rising by only 0.4% in July compared to a rise of 2.2% in June, while estimates were to rise by at least of 0.8%. And finally, the core factory orders, or excluding transportation, declined by the most since January of this year, declining by 0.6%, and this is compared to a rise of 0.6% last month. Despite these figures, the US dollar index also remained strong despite the fact that the probability for a rate hike in September has eased back toward 32%, and the chances right now is 32%, down from the 40% after the economic releases. However, this could be a short-term play ahead of the US jobs report on Friday, and therefore the US dollar remained well below its 100-day moving average on the daily chart, and we believe that the tight range is likely to continue until Friday, where it should clear the view for the upcoming weeks. As for the Asian session today, there were two economic releases from Australia which had a notable impact on the Aussie and kept it declining across the board. First of all, the retail sales unexpectedly declined by at least of 0.1% in July after rising by 0.6% in June, while it had been anticipated also to rise by 0.4%. However, the good news was from the trade balance deficit, which narrowed back or came in with positive outcomes, as it narrowed back toward 2.46 billion in July compared to 3.05 billion in June, while estimates were to widen toward 3.10 billion, and this is again the lowest deficit since March of 2015. Going forward to the European session ahead, eyes will be on the services PMIs data, or the final readings of services PMIs data across Europe, or across the Euro-area countries, including also the UK, in addition to the Eurozone retail sales will be released also today. And moreover, and most importantly, we will be waiting for the ECB decision today or later today, right before the US session opening bell. We believe that the ECB will keep the current policy unchanged, but at the same time, the recent strength in the euro is weighing on the ECB, and therefore a dovish tone is more likely during the press conference held by Mr. Mario Draghi. As for the US session, we wait for 40 economic releases from Canada and the US, including the trade balance in both Canada and the US, in addition to jobless claims in the US and the ISM non-manufacturing PMI. We're not going through any technical analysis today in this video, as we prefer to wait until the US jobs report on Friday to clear the view. For the time being, you can also check our daily analysis for various pairs or various FX products by visiting our website adssecurities.com/research. Thank you for watching. I'll see you once again tomorrow.